What is up, my favorite day traders? It's your girl, Just Vibe Profits. We are here with part two to teach you how to read the charts in the Forex, futures, stocks, crypto market. This is strictly based on Forex, but it can apply to all markets. I'm teaching you another part of the basics. Also, a sprinkle of advance. So, this can go for both. It can go for beginners, advanced, or even in your midterm of your trading journey. So, let's get straight to the point and let me show you what's up on these charts. All right. So we on the EU. If you don't know, now you know that I only trade one pair in the market. I've been only trading one pair for a whole year now, but I've been day trading for 4 years and I've seen a huge difference. But that's another video for another day. But let's get into it. So the first thing I want to show you is a demand. What is a demand zone? So right here, please, please, please take notes, my friends. Take notes, take notes. So a demand zone, you see consistent blue candles. Now, let me say this before we even start. If you watch part one, you notice my chart was it was the basics. It was green and red. That's the original market chart. But you can change colors on your chart if you want to. So please do not have the colors of my charts throw you off. So the blue is buy, the black is sell. Now, if this was the original chart in the markets, then it will be red and green. That's the default of all charts. That's the default. But a lot of people who've been day traded for a while, even if it's haven't been for a while, they like to change the colors to what they like and what they prefer. But that don't mean it change what it means. So the blue on my charts is buy and the black is sell. So I'm just saying that for all the beginners to not let that confuse you. So let's get into business. All right. So demand zone. You see consistent blue candles right here. So that means that the buyers are in the market. The banks is sneaking in slowly. The big investors, they sneaking into the market and they leave a print. So you see consistent blue, 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 blue. Okay, that's telling me that people is buying, people's in the market. So I would draw a zone like I did with this square. I would draw a zone. So let's say, let me delete this and I'll just draw it again. So get this, when I draw my zone, I go to the bottom of the wick, I leave a bit breathing room, and then I drag it all the way across. Boom. And so even though my setup is right here, look at, there's multiple entries. There's one right here. There's one right here. There's one right there, that right here. But I picked this because this was the London session time. So all of the examples I'm going to show you is London session besides one. But I'm in a transferring to London session. I've been trading New York and I'm about to go back to London. That could be for another video. But yeah, so this is New York session. This is my entry right there, what I pointed out. That's my entry. Got in the trade and I made some money with the buyers. So to just break that down to you, I see that buyers is in the market. And so I set up and prepare to join with them. And then look what happens. Boom. You see that? You see a huge difference. Just because you see little buyers is slowly going up consistently, leave a mark, drag it across, and look, now you making money with the big folks, with the big people. Now you making money. Come on now, stop playing. Okay. All right. Please write down these notes. A demand zone is specifically price leveled on a financial market chart where there are excessive buyers causing the price to rise. So that means, like I said, buyers is in the market. Let's go to the next one. All right. Let's pay attention to the supply. Don't have the other one confuse you. All right. So supply zone. We was just talking about demand. Demand means up. Write that down, please. Write that down in your notes. When you think of demand, that means buyers is in the market, up. When you think of supply, people are selling their assets. They're selling, they're selling, they're selling. So when you think of supply, down. Excessive people is going down. Demand, excessive people is going up. They're buying. So you see this right here. A supply zone, also referred to as a distribute zone, is a price level on a chart where traders tend to sell their assets, like I told you. So it's not that big of a difference. It's literally just the opposite. You see, you don't have to have like six black candles, red candles, whatever your chart is. You don't have to have like a lot of consistent candles. I promise you, just two candles can get you somewhere. That's just the biggest hint right here. You one, two, three, four. Four consistent black candles. I'm like, if I'm coming into the market, I'm like, okay, I see that it's four consistent black candles. That means people are selling. People are selling right now, and I know the people who missed out, they're going to come back up and they're going to go make some money with them. So that's exactly what happened. They started selling, they left a footprint like, hey, y'all, we're getting into the market. They go down, they go down. And then the big investors, they're like, dang, we just missed that trade. So the banks, they like to make money with the other people, not us, but with the big investors. And so you're just making money with these people. So let me show you. So go down. Also, let me say this before I continue. If you have any personal questions, please comment down below. Comment down below on this channel. Please, 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 please. Anyways, let's get to the point. All right. And so, like I said, they left their footprints. They come back down. They come back up. And then they shoot down. You see what happened. You make a money. Boom. Boom. So basically you catch the footprints and then you make money with them. They will go down, they pull back, and they go down again. It's the same thing going up. You're just making money with the banks. You see their footprints, you hop in. See the footprint, hop in. All right, let's get into resistance. So what I just showed you so far was supply and demand. Now I'm about to teach you support and resistance. Right here, the setup is resistance. So you see wick, 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 wick. I see so many wicks, yo. And so when you see all these wicks from the top, that means it's resisting to go up. So here the market is going up, but is resisting. It's like, we're not going up, we're not going up. So eventually it's going to drop because it's showing you that it don't want to go up. The market don't want to go up right here. And so what did that tell you? That it's about to drop. That don't mean it's about to drop unless it's trending for like a long time, but it's telling you right here in this moment the market's about to drop. How did I know that? I know that because I look to the left of me and I see that there is wicks. Boom, don't want to go up. Boom, don't want to go up. Boom, don't want to go up. It's going down. Look at this long wick. It's telling me that we don't want to go up. So what do? I draw a line where it's the wicks, and then I hop into the market. Boom. And then you win that trade. You know what I'm saying? And so yeah, so you see that it don't want to go up. That's telling you that eventually it's going to go down. And that's exactly what happened here. Now here is the notes. A price range encounters selling pressure, causing it to reverse or consolidate. So like I said, that it's pressure on the table that people is selling. And so it's literally showing you proof that it's not going to go up. You see all these long wicks. It's going up, down, up, down. Price is not closing up here. Price is closing down here. Price is closing down here. So it's telling you like, yo, we don't want to go. We don't want to go. So that's the biggest hint that the market's about to drop. Please write that down in your notes. Each and every time you see a text box, pause this video, write it down. Please, please, please. These are key points. Let's go to the next setup. What I got for you. Okay. This is a good one. I wouldn't even say this is a basic right here. This is basics and advanced because even advanced people, they don't even know much about this. This is a cheat code to trading. Look at this. Right here is a gap in the market. Let me see if there's like a circle. There's a circle right here. Let me see. I never used the circle thing. There we go. This is perfect actually. Boom. Right here. That is a gap in the market. Boom. When you see that there is a gap in the market and you see that there's consistent candles. Remember I told y'all about the consistent candles right here. This is consistent candles. Boom. Look at all those long candles. And you see they left a gap. This is proof that the banks is in the market. When you see big, large candles and they leave a gap, that means they're coming back. That they want the other banks who missed out on this trade, they want them to make money with them. So what they do is that they leave a gap. And so when I see a gap, I draw it across because I know that they're coming back. I know that the banks is going to come back. So you know what I'm going to do? I'm going to join the bank. So look at this. Now everybody entry is different. For some people might think like, oh, this is a late entry. I'm going to get closer and closer into entries. Let me zoom up and show you how I enter in a trade. And so I don't enter in. I see that boom, it fills this gap, but I'm not entering in a trade until it passes the previous candle. Me personally, a lot of people they might be entering in this aggressively, but when you enter in a trade aggressively, it can easily turn the other way. So when this candle it passes this candle right here, the last previous price, that's when I enter into the market. That's when I start to enter into the market because it's basically like my confirmation. It's basically telling me like, hey, like we this is happening, like it's going down or it's going up, whatever the thing is. So right there, this circle is actually very useful, y'all. Right there, it passed it up. I'm like, let me get into the trade. I'm not getting into the trade until it passes up the previous candle. That's me, personal preference. I suggest others to do it as well. And then boom, you make money with the bank and it drops. So gaps is a huge thing because it's literally a cheat code. It's like, yo, we leaving a gap for you. Take advantage of that and hop into it. When they clear that gap, boom, hop in, make money with the bank. Come on, stop playing. All right. Like I said, write down these notes. Banks leave a gap in the market, so more investors to join for those who missed out. And we're going to join with those who missed out. Let's go on. All right. So we are here with a pullback. So a pullback is a temporary reverse in the direction of a trending market. So basically, you see the trend is going down. The market is going down. And so when you see the market's trending and it's going down, you're like, ooh, like I want to hop into this trend. But when is the perfect time to hop into this trend? The perfect time to hop into a trend is when the market pulls back. So the market's going to go down, it's going to go up, it's going to go down, it's going to go up, it's going to down, it's going to go up, it's going to go down. And then look, you get in when it goes up and then you go back down. So let me draw that out for you. Boom, 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 boom. Let me draw that out for y'all. Actually, I got it in my right here. So this is what I mean. It goes down, it goes up, it goes down. Here's the pullback. It goes up. Enter in the trade right here, and then it goes down. It makes money. Boom, and it does the same thing over and over again. So this will be going down. So this will be a higher low, lower high, higher low, lower high, higher low. Like it goes, honestly, I won't even say that's too important because honestly, look, it goes down, it goes up, it goes down. Once it goes back up, get in for the sale. Just imagine there's candles right here. This is just to break down the basics. You put your stop loss behind the last previous one. Now you're in there. Now you're going down with the market. You're following the trend. So that is what a pullback is. Please write that down. It's the same thing as it's a uptrend, and I'm pretty sure it's on the first setup. When the market's going up, it's going to do this real quick. It's gonna go up. It's gonna go down. It's gonna go up. When it goes back down, enter into the trade. Follow the trending market. Boom. Is that simple? That's easy. So when there's a trend, you look for pullbacks to hop in. Because just because you see a trend, that don't mean like, oh, let me hop in, let me go sell because I see it's going down. No, you have to find the perfect opportunity first, and then you follow through. I think I have one more. I'm pretty sure. Yeah. Maybe two more. Yep, two more. All right. So I was showing y'all earlier supply. This is another demand. To get this supply and demand, that's literally obviously, as you can tell, my go-to. Like I love supply and demand. My number two is support and resistance, what I trade. But my main strategy is based off of supply and demand. And so right here, consistent blue candles. The banks is leaving a footprint. The banks is saying, we are coming, we are in. And so these is the big investors, and they're like buying, 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 buying. So you see, boom, 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 boom. When I see consistent, what do? You draw the zone, bottom of the wick, leave a breather room on the top of it, and then you enter in the trade. You see what I said? It passed up that previous candle, enter in the trade, make money with the banks. Make money with the banks, baby. Yes, this is what you do. So they leave a footprint. Once they come back down to this zone, make money with the banks. Footprint, money with the banks. Footprint, money with the banks. You got that? Consistent. Make money with them, baby. Come on. All right. Now we are here with the support. With the support. So it's the same thing. When I was telling you about resistance, here's a perfect example. Actually, resistance. Hold on. Let me remove this because that's actually a perfect example. Yeah. So we got two examples actually. I'm just now seeing the second one. Let me show you the first one. Is what I draw. Support. Long wick. Draw it across. Long wick. It's telling me that they don't want to go down. They're about to go up. Draw that across. And then boom. You make money. Make money. It's basically, it's a support. It's a support so it don't fall. When it's on top, it's a resistance. It's a resistance so it don't keep going up. But look at this right here. I'm just now seeing this. I'm actually going to delete this. Draw this. You see these wicks right here? This counts as a resistance right here. This is resistance, believe it or not. Look at that. You see these wicks? Sometimes it will be like, look at that. Look at that. I'm just now seeing this, y'all. This is a setup on spot. It's not wicking for no reason. Look to the left. Look behind. Look behind. This is resistance. Resistance right here on the top. And you see, boom, boom, boom. It don't want to go up. There is multiple entries in this. Multiple entries. Right here. All right, I'm sorry, y'all. The video cut out, but like this is resistance right here. Wix is telling you that I don't want to go up. We don't want to go up. There's multiple entries. Boom, here's an entry right here. Put your stop loss right right behind the resistance line and then make money. Look, there's multiple times to make money in this. Right here. Boom. Boom. Make money. This low-key looks like a range. A range is when it's like pop, 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 like zigzag. It's not going anywhere. Boom. There's multiple times to make money. Look, another one right here. So basically, when you see these wicks, it's telling you that we don't want to go past this price line. We don't want to go past this price right here. So that's telling you that they're going to come back, excuse me, and they're not going to want to come past this price again. But I'm pretty sure that is my last setup. Yeah, that is my last setup. So I appreciate y'all tuning in to the Just Vibe Profits. I hope that you got a benefit out of this, even if you're an advanced trader, beginning trader. There was some key points to take in this video, and I appreciate you tuning in. And like I said, please, please, please leave a comment down below for any questions, any suggestions, anything for the future to learn about day trading, yo. And I can't wait to be on this journey with y'all and take y'all along with me and teach you the keys to financial freedom. I love y'all. Have a blessed day and peace.